All right, today I'm going to go through the concept of power of three, otherwise known as PO3, and which is also the concept of accumulation, manipulation, and distribution, abbreviated as AMD, right? So, what is that? It's basically the concept of smart money accumulating orders, manipulating price for the purpose of liquidity, and then distributing, which is basically getting out of the positions. Okay, so you can see this happening on a chart, which I'll show you later. But you can also see it on singular candles, right? Because price is fractal, and you can have candles on the chart here going all the way to the 12 month, which I use. Okay, so the whole point of power of three accumulation, manipulation, distribution is understanding how smart money works and what use would it be for us if we can't use it, right? So it's for us to anticipate the next candle, right? Anticipate smart money accumulating orders at the open or below the open, causing some sort of manipulation and then expanding up, and then distributing the orders at the high and eventually closing. Okay? For a bearish candle, it's the same thing. Open, manipulation, expansion, distribution, and then close. That's all well and good. But of course, the purpose of understanding power of three is to be able to utilize it, right? It's to able to capture the range of, let's say, an individual candle, usually on a higher time frame. So this is what one candle would look like. And let's say we were to go on to let's go over here. And it may look something like this. Price opens on a candle. Let me just change the color. Okay, so we see an open. We see some sort of accumulation happening. Sorry about that. And then maybe we see a manipulation. And then we get a reversal. Price expands, makes a high, and then eventually closes, right? So it opened at this level, let's say over here, made a low all the way down, let's say here, reversed, and then distributed up here. Okay, so this is something you could see on the chart, let's say in candles, but it may not always be so cut and dry. A candle like that may see something, something more extreme. It's completely possible, but this is generally the concept. If you are bullish and you're anticipating a higher price on a specific candle on a time frame, you want to be buying below the open, right? It would be very nice if you were able to buy anywhere below the open. Let's not talk about stop loss at the moment, and then you have your targets, whatever that may be, and then that's great. Okay, if you're expecting a expansionary price swing, or even just an individual candle, which I'll show you in a second. So, yeah, you want to be buying below the open and selling at appropriate targets. Of course, whatever your strategy is fine, but this just increases the probability, and yeah, it's where smart money would be buying as well. Below these lows here, because there's liquidity, and after the manipulation is complete, that's when it's time to start moving in the next leg of whatever maker model prices in, right? So this would be a buy model. So let's go to the chart. Let's start with the monthly time frame. Okay, so I'll show you how I would anticipate the power of three accumulation, manipulation, distribution on a singular candle. All right, so first of all, I see a fair value gap here. Okay, on the monthly. So let's say we saw price come into the fair value gap and we're bullish for price to come and let's say take out some highs over here. Okay, let me use the rewind tool. We get hindsight here, but this is how I would use it. So this can be on any time frame, guys. But for the monthly, let's say we were here. All right. We had this price movement down into this fair value gap. And then now we had an expansion up. So now I'm anticipating for this general order block here, which would be this entire area, entire range. Okay, this would be the mean threshold because it's consecutive down candles. I'd be anticipating price coming into here and then expanding up in one candle, two at most. All right, so this is the monthly. I want to be on the lower time frame, catching that move. Okay, so now I'm going to go to I'm just going to go straight to the daily. Let me see if I can get the next candle. Okay. Okay, let me go back again because TradingView tends to show the entire candle, which is not good. Okay, so let's say price is there and the day is about to close. I don't know where the open is. I guess it would be somewhere around here, right? So I would want to buy below this open, monthly open. Let's say the next candle opens there. Let's go straight to the daily then. So we see the monthly opens here. Where is it? 15, 29, 30th of May. Okay, 30th of May is here. No, we got to wait for the 3rd of June. 3rd of June, Monday. Okay. 3rd of June over here. This is the new monthly open. Let's see if we even had an opportunity to buy. But basically, I'm expecting price to... you always want to be buying below the monthly open. So it opened here and then it moved down. Now it's expanding up on the daily. And I have this target of here. Okay. So if I miss this move, I can be going to a lower time frame to find a possible entry. All right. So what do I see down here? There's liquidity below these lows. Let's see what happens. Okay. So it comes all the way back to the open. So now we're in June 10th on the 4-hour time frame. So back here, let's see, do we come down or not before making a high? Okay, 14th of June, we take the liquidity here. Do we want to come any lower? Now we're just waiting for a reversal. Okay, that's being respected. There's a fair value gap here. Would this be a possible entry? Okay, it continues lower first. No problem. 21st of June. It's almost at the mean threshold of this order block. So this liquidity is taken out. We're on the 26th of June. Okay, this goes into July. Where's July? July. Okay, somewhere here is the July open. July open here. Yes. Okay, so this is a monthly open. Price comes down and then starts expanding up. Look at it come above. This is in the 4-hour. Look at it come above the previous monthly open and start bouncing on that. It's a good sign to me. And yeah, it comes above this swing high, which was our target. So let's go back to the monthly and just see what that looks like. Okay, so yeah, this was our target up here. Just because these highs, a high here and a high here, and then we had the high here. I usually target highs, swing highs. Those are my targets. So I'll just delete this monthly open. So we had, remember this green candle, and we anticipate price coming. Came all the way to this order block actually, or the mean threshold of this entire order block, but generally just touched the lowest candle, and then the next month opened up July. It made those equal lows you saw, but it just started expanding from there. And where are we now? We're actually here now, actually, at this moment of time. So yeah, price came into this monthly gap here, and let's just refine this order block. Okay, price expanded out of it. Now we have the anticipation of what? Price came into this fair value gap. This order block expanded out of it. We anticipate price coming into this order block, or generally in that range, and I usually wait for a reversal. And then we expanded out, took out this, and now it looks like we'll possibly be using this again, but I'm not going to get into other concepts at the moment. But let's go back to the 4-hour and just have a look at that with the refined order block. Here we go. We get this expansion out, and if you have monthly opens on there, that's cool because you can see price bouncing on here, not wanting to go lower, which is very nice. Very indicative of price wanting to leave that area and being on side with the interbank algorithm and smart money. And we have a gap here. Price bounces on that into this reclaimed bearish order block, and then boom, fly, we hit our target, and now we're expanding down. Okay, so that's power of 3, and that's how I use it to anticipate the next candle. All right, but it's important to know the open, high, low, close. You can look at this chart. You could say, yes, open here, and here's the manipulation: open, low, expand, high, and then close somewhere here, right? So this might be one candle. It was green, and then you get a wick down here, and then you get a wick. Where's the close? Let's say close was there, and you get the wick up here, right? Maybe it looks like this on a candle. Okay, so yeah, I hope you found that insightful. I think it's quite important to understand the power of 3 if you're using ICT's concepts, because everything happens in terms of liquidity, and how liquidity is engineered is through manipulation. And we all know smart money needs time to gather liquidity as well because of how deep their pockets are. So there's the whole accumulation period. The manipulation can happen slowly or quickly, but there's usually one final move that's rather quick to trap everyone at a certain point, and then they distribute their orders at a higher or lower price depending if they're long or short. So yeah, see you guys next time.